Okay, let's jump into things. Where we at? 11:04 p.m. on the Sunday night. So again, a little a little bit of a later one, but that's all right. We're sort of just sort of recalibrating and that sort of getting stuck back into things. And of course, main thing is just to have a look at the chance of the chart sort of before the week sort of kicks off. But it's I'm always in a bit of a mix with these things. I always sort of think, look, I could do the analysis early on the Saturday, get it out of the way, that's fine. But of course, events and data, or not data and that, but news and events and that can sort of drop over the weekend. So sometimes you can do these weekend analysis and then, it's a little bit sort of blown out by the time market opens. But regardless of it all, main thing want to start off with obviously is NFP. Like, whew, that was absolutely, I mean, just shocking. And this just goes to show how much you just really can't put a whole lot of stock in the actual true sort of believability, probably lack of a better word at the moment, of the data. Like, they missed the number. That's fine. You know what I mean? We've seen, particularly with the RBA, the job numbers and all this kind of stuff, they missed shockingly in that. But the big thing that I think really actually added to this whole sort of move was this, that you were at 147 last month. That got revised down, basically, 160,000 jobs. Oh, sorry, no, it was 14, wasn't it? So, that got revised down 130 odd thousand jobs. That's incredible. Like, it's not just a little sort of, whoops, oh, no, we forgot to carry the one. That's 10x they stated at 10x of what it actually has been revised to. That, with the fact that you had the actual print this month sort of come in a little bit weaker, after the comments that we had that came from Powell earlier in the week, saying that that could be kind of almost like the Achilles heel of it all, that the if the job numbers and that could be something that sort of like supersedes the whole inflation idea. Look, it was shocking, and US dollar got absolutely slammed because of it, and had a little bit of a like rally attempt afterwards, kind of thing. But then, of course, they came out with a bit of ISM data, and of course, a fail there as well, gave it a second wave back down, and really did close right on its lows. So, this big sort of like US dollar rally seems to have, at least for the moment, been just absolutely slapped on the nose. So, yeah, that'll be sort of fun to unpack to sort of see if that's it. Is that the run? Like, I said the big thing with what Powell was sort of saying was that, as I said, that inflation is the thing that he's most concerned about, and that's sort of obviously mainly due to sort of the tariffs and all this kind of stuff here. But if job numbers get bad, well, that could supersede that, and now we've got bad job numbers, like shockingly bad too. And I mean, look, it's a one-off print, which is bad. I guess it depends if you're going to call last month's one bad or not. I mean, obviously, with the revised number, it was. But yeah, that's certainly not painting a rosy picture for the US dollar there. And US dollar got slapped, and that was according with that. And we saw gold rip up to the top side. So yeah, that'll be interesting. I mean, that'll be the main sort of thing to see how much that sort of flows through. I mean, typically these things you would expect it to flow through into the early part of the week, and then maybe a bit of turnaround Tuesday action. But we'll have to wait and see with that. But have a quick look about what we've got coming up for this month here. So where we at? Just onto this week here. So starting off Monday, we've got bank holiday in Australia, do we? Hmm. What did we close for? Banks and Heritage? Yeah, I was about to say I'm in Victoria, so there's nothing that I'd sort of heard of and that. So I'd be surprised anyway. Look, I mean, look, it's Aussie, so I don't think that'll affect things a great deal anyway. Inflation gauge, we have no sort of forecast with these sort of things here. Excuse me, but apart from that, as we can sort of see, generally same sort of thing's been the theme, and it kind of always is that Monday data-wise is generally a little bit of a quiet one. Obviously, Asia's kicking into gear, but you haven't really had the US and Euro sort of sessions. Really, I know everybody kind of comes online at once, but they haven't really sort of kicked off that week there. So Monday's always a little bit of a quieter sort of a data day for it all. Moving on to Tuesday, Monday night kind of thing. Tuesday there, a little bit of sort of data from the US here. Factory orders expected to be absolutely slapped there, so that's not doing too good. If their whole idea is to sort of be sort of bringing a bit of manufacturing back over to the US. That's certainly not what you kind of want to see with those numbers. But again, it's not a high tier bit of data. It's not going to be, oh my God, wow, factory orders came in high or low. That's going to be shifting things a great deal. Um, Moving on, actually through Tuesday, we've got job advertisements. Again, no forecast for these sort of things with the Aussie here. Might be give a bit of an idea. I guess this is jobs advertisements here. I mean, this is just ANZ, so it's from one of the banks, but I mean similar to potentially Jolts, I would say. But we'll see with this. Jolts obviously comes out with a number. This is just a percentage. Caxton Service PMI. So we've got a whole bunch of sort of PMIs coming out through the day. I'm not really hanging my hat on a lot of this kind of stuff to move a lot of this. US, I assume, will be the one that's probably going to move things. So maybe a little bit quiet through Monday, Tuesday, Wednesday morning. Seem to sort of have ISM data. This is tipped to be fairly flat with that, but the services, which seems to have been the sort of stronger side of things more recently, seems to be a slight little tick up here. So again, these are the things that US really needs, or DXY kind of needs at the moment, to sort of maintain any kind of sort of bullish, I guess, recovery at this stage from the sort of Friday sell-off, but the momentum that we've sort of seen over the last sort of week or so, obviously excluding sort of Friday there. Moving through, I've got employment rates over there, 5.3%. So a little bit higher over in New Zealand as well. Plus, you had the rates a lot higher as well. So be interesting. And it's expected quite a bit of a jump up over there as well. Apart from that, it's sort of pretty quiet. So again, look, I mean, last week was very busy with the data. Like it was, FOMC, we had CPI, we had RBA as well. There was a few, sorry, RBA, CPI. So it was quite a sort of busy week last week for the data. Obviously, normal sort of first week kind of things with ADP and all that as well. But it's looking pretty quiet through here. We've got trade balance for Australia on the Thursday. Again, nothing's really sort of screaming and sort of jumping out at us here. Look, a little bit of a tick up here. We did sort of see, obviously, it did actually sort of seem to get a whole heap of sort of news coverage, but the Australia got sort of locked in at 10%. Well, I'm not sure. I've got to see whether this actually goes because there's a lot of these sort of back and forth things. But they were saying now pretty much 10% for Australia, which is fair enough because we've got 0% on them. Plus we have a surplus, so we're buying more from them than they're buying from us anyway. So yeah, so that it's anyway. Keep sort of moving on. Maybe I need to do these things a little bit earlier in the night. Ticking forward, but look, all in all, it's looking pretty quiet, sort of with the news sort of coming through the start of the week. We got normal unemployment claims on Thursday. We've got BOE as well coming out. So BOE looks to be sort of cutting. Could be something. Again, look, BOE it'll affect DXY because it obviously makes up a portion of it, but it's not really one that reverberates sort of past. It's sort of direct crosses, I don't sort of find. So be interesting to see how that go. Unemployment claims still staying relatively low. We had a bit of a spike up with this a couple of weeks ago. And everyone was like, oh, it's getting up higher. And as you can see, 240 they were expecting here. But it never really eventuated to anything and then kind of actually sort of came back down. So if we have a look at the graph here, you can see it was moving up. And it's just really just been like, up and just on the fall through here. So as long as, again, this remains at a bit of a lower number, I think this could be something that could, not completely shoot US dollar in the foot. And then moving through the rest of the week, so data week looks very barren this week. There is nothing of note that's going to be like, okay, markets setting up for this kind of thing. So with that, the players really to sort of see how much the market digests what happened with NFP. Look, NFP is probably what I call second tier data, only behind FOMC as the first tier data, and probably about as equal as sort of CPI tends to be, even though sort of the Fed say PCE is a little bit more of the data that they look at. But it's not really sort of a great deal sort of happening this week. So we've got to sort of see is the market going to basically just run with that sort of idea that, we had sort of an incredibly bad jobs number. Powell was sort of saying that that could be the Achilles heel, and they start to sort of sell that thing off. Well, I guess, that's the whole point of looking at the charts to have a bit of an idea about it. But let's jump onto the charts as we start. Go through. Let's start off with DXY. Okay. So yeah, look, this was I actually put a sort of I think post out, or maybe it was in a chat. I can't remember. It was one of these sort of things saying that NFP was going to be the one that sort of, because as you can see, it was pushing up against this 100 line, yeah, 100, around this zone here, and that was really sort of where it was just like, okay, are we going to sort of kick through now, or is it just going to be slapped on the head a little bit? And yeah, I thought NFP, actually, to be honest, I thought the numbers would have come in a little bit better than they did. I lightened up a lot of my positions prior to it, luckily, which, worked out pretty well. But certainly, it would have been nice to have been sort of positioned against this thing. But, that's life. I'm happy to sort of be on the sideline and sort of, play the fallout of the NFP because like these large bits of data and that FOMC, CPIs, these kind of things, like they're fast and hard in that, and they can generally sort of produce pretty good sort of results. But one thing I've kind of found is that you can do well, you can obviously get ripped apart as the data comes out, and this thing kind of really just dropped. Like there wasn't really a whole heap of sort of typical back and forth kind of stuff. So with NFP, what they sort of tend to say is that well, the general sort of consensus is that it'll sort of go up, up, down, up, down, up, down, and then, wait 15 minutes, wait half an hour. After that, that'll be the kind of direction it takes. But it did not do any of this. As you can see, as it came out, it dropped like a CPI bit of data, and it just fell through the floor. And as you can see, this is as you get down lower and lower candles, there's 5 minutes, and then it just dribbled down. And, as I said, you had that ISM data, which kind of sort of killed any kind of rally attempt into the end of the week. But apart from sort of like, the initial reactions with these sort of things, generally they can set up a bit of a trend through the next sort of, couple of weeks or so. I mean, we've just had FOMC, so really it's in the point of like a whole bunch of sort of speculation at the moment. And by that, I kind of mean that, excuse me, by that I mean sort of like, we've got to sort of work out, is the market going to run with this and sort of say, okay, look, this has changed everything, and nah, they're definitely going to cut now because of what Powell said, yada, 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 or has it just really sort of just obviously quashed it a little bit, this sort of move that had been seen to the top side, but does the market accept that and then think, okay, bigger picture kind of things and keep sort of moving it up a little bit higher? So have a look at a bit of the 10-year, because I think this did have a bit of a push off, if I can find where we've got it. So here's the 10-year, and yeah, similar to this sort of thing here, you can see absolutely slapped. So the market could not get out of that quick enough through that point there. But as you can see, coming back into a little bit of a support zone. So look, I think we'll have to say, look, honestly, with the big sort of moves down like this, you generally, I mean, it's kind of like, okay, big move, close on the lows. You could see a little bit of follow through, but generally you would probably see at least some sort of recovery effort. And that's what I kind of want to see. I want to see, is the market going to sort of go, okay, hey, look, that sucks, it's bad, but are we just retesting this level down here? And maybe we can actually sort of find some little form of recovery. So if we have a look at just this one move from the lows here, yeah, so go back 50%, pretty much, call that in one or two candles in the lower sort of time frames there. So I think sort of the fact that it actually sort of held around this zone here is quite interesting, because obviously this is a little bit of a sort of a zone. If you cut this all the way through here, we can see that the market's tried to buy it, to sell it down, try to hold above, try to hold above. It's obviously resistance here, so coming back for support here. So look, the two levels that I'm kind of looking at here, mainly sort of, this sort of one through here, 98.50, to sort of see if we can hold here. I expect a little bit of a sort of overshoot, but daily I would like to sort of see some sort of recovery move up to the top here. If we see continuation and we close back down around these sort of like sub 98, I think that could really sort of see this thing pretty much undo this whole move up over here. But again, look, I just want to see what the market does in terms of sort of digesting this sort of bit of data. So I'm not going to be sort of jumping into anything too quickly, and sort of see if we can get a couple of shorter trades out while the market sort of flips up and down with it all. But see if there's any sort of any chance for it to have any sort of recovery here. Certainly, look, the data there favors the idea that it's moving back down, and that's what we saw, a solid sell back down here. The question is, can the market accept that and say, hey, look, all things considered, it's probably still worth a little bit more of an upside move, or is that it? Is that boom, game's over there? So, we'll have to sort of get into the lower time frames and sort of see what they've got to say and see what they'll do sort of through that. But, I think sort of maybe a move even back down to say 98.29, 98.30, that kind of thing, which is the 61% of this last leg up through here could provide a little bit of a rally attempt. So I wouldn't be sort of hanging my hat on the idea that we're coming down here necessarily straight away, but certainly a bit of back and forth, and then see what happens. Mainly you'll see Asia, I don't expect to have a great deal happening, but once Euro comes online, I think that's when we'll sort of see things a little bit moving, crucial. But, above 98.50 for the daily, I'd like to sort of see if this is going to move back up over the side at all, a sort of close up around here. I think if we close sub that, around that 98 level, then we could probably look for a little bit more sort of downside. Move forward. Okay, we got gold. So gold really took advantage of this, and as you can see, it didn't really give back a great deal. Like this initial spike through here is as the NFP dropped, and then obviously even at the end there, ISM a little bit worse as well. Bang, another move up. So gold very much sort of like taking advantage of that, which is a little bit crazy because it was coming down. Excuse me, right into this sort of support zone here. I tested it. It was ready to go, and as you can see, obviously, you got to have you got to have everything working for you. You've got to have the technicals, and then the larger sort of support zones and these kind of things really needs the data to be pointing in its direction to break it. And look, it was set to go. Had that sort of come out with a strong number, that would have been the thing that broke gold down to these sides over here. So where I sort of say, like, I'm not ready to sort of sell gold off or cut gold off, US dollar off immediately, is the fact that the market's happy to sell this thing down. Yes, the data sort of said, hey, look, we can move back up. Is the market going to use this and go, well, that's a great occasion for it. We're sending it down here anyway. Here's a great, you can't see me doing the inverted commas, but here's an excuse for it to move back up so we could sell it at a little bit of a higher level. I know it sort of sounds a little bit sort of, tinfoil hatish, but, as I said, these are the things over here where, I've marked them out, and these kind of moves here, the attacks and then the US bombing. The market didn't react to it at all and just used it as an occasion basically to sell straight back into it. I mean, if you look at this on a daily, well, that's that's a solid candle. RSI is supporting it to move up here a little bit higher. So again, there's no point being first one into the trade. You're not going to win any prizes by being like, I was in 5 minutes after the market opened. But should you sort of drill down onto a lower time frame and find that this thing sort of may start to, look to undo some of this sort of move, to me, that's like the market sort of saying, hey, look, you know what? We're sort of selling into this thing now. We've used this great occasion with really bad weak US data to get a better price to sell it. And if you come back down here, that'll be the time that you'll sort of go through because it's had a lot of opportunities down here. If it's going to go, this will be the time for it to go. Otherwise, I guess on, and we're looking back up towards 34.30s up in that sort of resistance zone up over there. But for the time being, if we're looking at this last leg down over here, yeah, I would say probably a move up to, say, 33.73 looks pretty good, which is a 61%. 61% plus that horizontal through here. I think this is a crucial kind of line that you kind of want to see. If you want to see downside, I would say underneath 33.37, but certainly you wouldn't want to be short on it a great deal going up above sort of like, say, 33.80, which sort of clears out this top wick over here, but this horizontal through here, we can see the wick high back over this point here. Above sort of 33.80, well, we're playing in this field up over here again, but, this seems like a reasonable area to sort of see sellers move in, profit takers move in. It did close on its highs, so I would expect a little bit of follow through come Monday. But again, the close is going to be crucial. If we close way up over here, well, this could be something big, and we're moving back up to the top side. But should it sort of like get a little bit of a flare up and be sold into, that's what I'm sort of looking for to sort of see how the market kind of digests that. Underneath 33, say 37, I would probably maybe look for this thing to sort of come maybe dribbled back down and come back down to these zones over here. Lack of data this week really kind of makes me think there's zero chance that even if this thing did come back down here that it would break through. But again, you just want to sort of see is the market going to use this as the trigger occasion? Um, Look, it's a bit hard, but I would say because you got FOMC so far away that maybe the market might sort of take it for a bit, but not necessarily be breaking out quite now because you haven't had the Fed actually cut. For the Fed to cut, that would give you a breakout. But it's going to, and this is what I was saying before, that it's just going to be sort of more of a bit of a sort of speculation game for the time being till we get a little bit closer to that. So we'll see how we go. But yeah, 33.80 and 33.35. I'm kind of looking for directions with gold there. I mean, it leads into the idea that we will be moving higher, at least in the short term. As I said, though, to me, I'm not fully convinced that this is the be all end all and we're going to 3,500 all-time high tests just off that quite yet, quite yet. Have a look at Aussie, because Aussie, another one that sort of like sprung back to life off this sort of support line down here. So Aussie just won't quit. Which chart were we using? I think it was this one here. And this is what I sort of put out the other day, and I said, look, this line through here above sort of 64.80 was a level that I was interested about. As you can see, came up to it, closed on it, but unable to get over. And then we sold back down, and look, it had another little push up, the second push back up here of that ISM data, which came into the end of the week. But I think you got to sort of look with Aussie as well. Like, obviously, US dollar got sold off. And I know DXY doesn't involve Aussie, but it is the general consensus across the market of how they're sort of approaching the US dollar. But you got to take into account with Aussie as well the equity markets, and I think the equity markets took a little bit of a slap on that because they want to see strength and like basically strength and growth in the economy, and like if they're losing all these numbers, what I mean, it's not painting the rosiest picture. And I think this is the thing as well that sometimes people misconstrued, or they not maybe misconstrued, but they it takes a while to understand that cutting isn't always the same. Always, it's not like a sort of okay, they cut and bang, currency goes down and this goes up and yada yada. You've got to look at the reasons of why they're doing it. And the thing is, if they're sort of cutting because it's a drastic thing, and they're not cutting now, but I'm just saying if that's the thought, the reason that they'd be cutting now is not because of anything the economy can sort of like cope with it. It's more like a saving thing, like as in okay, we're not getting the jobs, we need to stimulate, we need to sort of move it up. Well, that's not exactly okay, hey, everything's rosy, i.e. risk on. That's more risk off, and that's what weighed on Aussie, and that's probably why despite these sort of things, you saw Aussie get sold into after that initial spike. I mean, we went 23. I mean, it went 70 points, but then sort of gave back, 50 of them. So look, again, be interesting to sort of see how much is this going to flow through, sort of come Monday. But yeah, certainly, I think at the moment, I think above this sort of spike high, so above sort of 55, sorry, 65, you might see a little bit more of a recovery. But the fact that it sort of like tested this level here that we have marked out, which I'm going to put in again, um, and then sort of got sold back down, makes me sort of, yeah, not so super quick to be sort of jumping on the Aussie longs there. But if we zoom it out, we are coming off this kind of channel support. So that played its part, if nothing else, sort of confirmed the two sides of it all now. So we know that sort of like, should this thing move up, should it break up higher? Well, we kind of got a pretty good idea about it, sort of where we think it could potentially run to, should this channel choose to continue. But again, we also have these lines down the bottom here, which mean that we've got an idea about sort of when to sort of say, hey, look, this thing's failed. And this is why sort of I'm not completely sold on selling US dollar incredibly hard, just based off that, since I wasn't involved with it as the data dropped. I want to sort of see, is the market going to use that and run with it, or are they going to go, okay, well that's fine, shake it off, trap a few, and then sort of sell back. So yeah, we'll have to sort of see how sort of Asia goes, but I think probably above, call it above 65. Let's actually move this up here. Change the alert on this. Recovery bounce, taking out NFP highs. Look, I would say there's a good chance that this thing, minimum, comes up and tests these levels. But as I said, a close above 65, I think, is going to be the significant one that you want to see to sort of see a little bit more of this sort of Aussie recovery here, if it is going to recover off this. RSI is not looking super rosy on this. This is on 1 hour. 4 hour could give it a little bit through here. Yeah, we'll have to sort of wait and see. But yeah, I think that's 65 and then 65.30 are the kind of upside targets that you're kind of looking for at the moment. Yeah, move along. We've got silver. So silver, as I said, I think we covered this on the weekend. Sort of coming back down, sorry, on the Friday, coming back down into this big chop range that it had. So it had two big attempts in that, sort of like holding out the top here. Obviously couldn't hold it. The recovery wasn't great. Recovery on gold obviously was a lot better. That was a leading sort of thing there. But that's because sort of silver can really wear two hats. Like silver can be, it's obviously part of the precious metal side of things, but it's also a bit of an industrial metal as well. And you got that's the thing with trading silver sometimes. You got to be able to sort of sort of make a educated guess, do analysis on sort of what hat it's kind of wearing at the time. Because as you can see, sort of like gold really took off and ran with that data that came out. Silver got off its lows, but it's certainly not breaking any levels in recovery here. I mean, if you look at this here, so this is silver's sell down. It's 23%. I mean, where was gold at? Which is gold chart? That's too many charts. We'll be wiping them this week. So gold, after its sell down, is almost up to 61%. And as I said, silver, with 8 charts, 23%. So obviously, look, it's not sort of really benefiting a great deal from that US dollar sell-off. That's probably because again, I think this is a bit of a risk factor move. Obviously, US dollar's getting sold off, and so it being a sort of a risk off asset, they're not going to that, and so that's why we saw gold pump up even harder. So market's going risk off. We're seeing US dollar not being a viable option for that risk off, so that's why Aussie gave back a little bit of it there because it's risk off. That's why equities came off. That's a little bit risk off. And that's why gold did a lot better than silver in this instance with the recovery bounce, sort of off that little bit of data there. So, look, it's not out of the woods here for the downside, in my opinion. And I think if the market stays in a risk off mode, I think they could still see some downside. 35 still for the downside. Look, even if you got back up above sort of 37.70, I wouldn't totally be sold on it. It's a bit of a sort of choppy chart. This is on the 4 hour here, but you can't even really sort of find a nice clean line that the sellers have been moving on. As you can see, it's sort of like it's a bit all over the shop and that. I think sort of certainly if you get above sort of 38.30, so above the 61% up over here, yeah, I know that's where we are. So it's $1.30 or where you're off now. But if you're looking to hold this thing and trade it up a little bit more, I would sort of have a lot more confidence getting up above that 61%. But in saying that, I would say that that's almost a bit of a sell opportunity should it get up to this level over here. 61% of the sort of sell downs through here, that's a little horizontal. I think it's where you're going to see a reaction at this level, 38.25 to 38.30. I would say that's worth a shot, shorting it from that side over there, should it sort of push up to that level. Move along, we've got USD China. So China actually was doing very well. Like it had the big breakout, had the back test, had the high, and bang, slapped on the nose. Like so many of these things more recently, but that's fine. It was a technical level as well. As you can see, this is a big zone that we've been working on for, what's that, 7, 8 months or so now. It was big support. Once it had been under here, a couple of attempts to get back under, there was a very small chance that this thing was going to go through first time. Given that it's sort of like, it's obviously a keen level that the market's been tried to hold it for the buyers. It's played as part of the sellers, First time back after, and this is on a daily chart here, so this is going back June to, August here. So was that, start of June. So 2 months to get back to this level. The likelihood that this thing would sort of go through first time is probably pretty low. And obviously that's what we saw. We had the data to sort of back it up, but the market pushed it into it there and bang, slammed it back down. But again, look, it's coming back to this other area where we've seen it sort of been as a support, resistance. Watch what the market does here. And this is what I'm saying, that I'm not fully writing US dollar off yet. Look, it was a shocking number, and the revision, I think, was the clincher. Um, it's just a matter of the fact that it's a little bit far away from FOMC to sort of for people to go, okay, yep, that's it. And FOMC's around the corner, and we're going to start sort of positioning heavy and hard for that. I think there's a chance that we see a little bit of fluffing around between now and then. And finally with copper, so copper obviously had that slap down sort of through the week, which I covered the other day, 21%, I think this one candle was, which is just absolutely dwarfs this big breakout candle, which I have to look closer at it, but I'm pretty sure that this was actually just the enactment of that sort of stuff, wasn't it? This was like, oh, hey, we're going to put a 50% tariff on it. Okay, yes, we are enacting it. Bang, bang, bang. So absolute games going around everywhere. This is a little buy zone. I didn't actually buy this because this was a buy zone back here, which I had from the idea that we'd come down here and sort of move up. Obviously, never got filled on that one. But look, it chopped through there. It actually bounced for a brief second at that level. Maybe get super low. Maybe I'm just making this up. No, here we go. Yeah, this was on here. So as you can see, it kissed right into that zone. Big bounce up and then slam back down through here. I wasn't a part of this, I'm just pointing it out, but this little bounce just from here to here with this sort of 5 minute candle. So that's that was 8% in 5 minutes. So incredible movements with copper at the moment. But again, look, Aussie is known to be like, hey, copper's a bit of a sort of the canary for Aussie and all this kind of stuff. I've found that like a lot of correlations this year, that hasn't been overly true because as you can see, copper recovery, where was that sort of, this is the April sell down. So it was actually selling down prior. April sell down, bang, way up here, yearly highs, all this kind of thing, sort of new all-time highs. Aussie didn't react at all. Even this big move through here, that was like, that 50%, um, 50% headline on copper and moved up there. Aussie didn't react at all. So I'm a little bit skeptical about using this as a correlation sort of thing for the time being. But as I said on Thursday, Friday, I can't remember which one of these days I did, was say it was around here. And I'm like, look, this is not giving big recovery vibes. This is like consolidating quite heavily at the lows here. I still think we've probably got another leg down to sort of come down through here. We do have a rising support that sort of comes through, as you can see, sort of around here. Let's put an alert on this one actually. Um, that's what I'll be kind of looking to see how the market reacts for this, because this is one that obviously comes from back in July 22, and it obviously sort of held pretty well on those April sell downs. So I would expect this to have a little bit of a reaction again. With these kind of things, depending how it comes into it, if we do get another leg down and pushes down here, a wick down to these levels here, but if you can wick under and then close back up above this line, I think that could be the time to say, hey, look, we got a bit of a bounce coming here. But yeah, to me, I think it's just a bit ugly. Or it's obviously very ugly, but I think that's probably potentially got a little bit more downside there as well. So I'm not doing a great deal with that. So not a super exciting weekend analysis at the moment, only for the fact that haven't got much data coming out this week, and really it's kind of like sort of a wait and see of how the market sort of digests this NFP news. I think what I'm kind of looking for at the moment, and obviously this will be interesting sort of come Tuesday when you can sort of recap and look back on how Monday's session played out. But I would expect a little bit of stuffing around, follow through on Asia, and then sort of it's a bit hard to put your hat in the camp here, but I would say like a little bit of a follow through, but then a rally back up. So, if I get a little bit of an opportunity, maybe a little bit higher to short gold or a little bit lower to buy, a little bit higher to sell Aussie, they're the kind of two plays that I'm probably going to be sort of looking at for a little bit of a US dollar counter move after those initial follow through sort of positions in that early in Asia. All right, that's it from me.